Alrighty, traders, this is Blake Morrow, and you are listening to the Daily Roundup webinar. Hope everybody's having a great trading session. And another day, another rally in the NASDAQ. We've got the NASDAQ that is higher. I know you might be looking at the S&P, thinking, well, maybe the S&P is peaking out. But remember, I don't get excited about any of these moves as far as equities go, unless we've got all of the markets moving in one direction, because then it tells us it's not rotation. It's more of a, you're actually seeing selling. So yeah, the S&P is stopping shy of the megaphone pattern. But if you look at the NASDAQ continues to blaze higher, and I don't know where the highs are at. I don't know where we're stopping, but it's obviously not here at this point in time. A couple of really key developments that I'm seeing right now, at least near term, is you've got the euro, which is pushing up against the 60s. Okay, but we also have to point out that we're breaking out. I mean, we're challenging those highs, and chances of us breaking higher towards the big 161% extension, I think, is quite high. So in other words, this move lower, this is the post-pandemic move, okay? That 161% extension comes in at 120, roughly 120.40. So I think we are headed up there eventually, but we are challenging and struggling with the resistance at the 119.60 level, 66 level. So just keep that in mind as we grind higher. The cable continues to move higher, closing in on the 161% extension that we know is resistance. The Aussie is stronger. Kiwi is stronger, trying to play out a bull flag pattern. Here's your hourlies, just so you can see it. There's your Kiwi, bull flag that is in play. And matter of fact, that should point us towards 68.50. Aussie dollar, I guess you could probably say this is a bull flag too. Something like this, maybe a pennant, right? So I mean, this is bullish. And you look at currencies like here's the dollar Canadian. The dollar Canadian, it's at channel support, but we are failing to even rally past like previous support. So the dollar Canadian's really got to get a leg up above 131 to kind of turn the ship around. So the dollar just remains weak. You look at the dollar index, we're sitting on support at the 92.10. I think that's what I wrote down this morning. 92.10, yes it is, but we've been as low as 92. So the dollar continues to look vulnerable. I know, and I'm gonna state the obvious at this point in time, but let me go ahead and just say this: equities continue to move up. Grind there. Whether it's just the NASDAQ or the NASDAQ sells off and the S&P and the Dow bounce. Stocks continue to move higher, and while they're moving higher, the dollar is generally speaking going to be under pressure. Okay, it's just the way it is. And at this point in time, the yen pairs are continuing higher. I mean, the Aussie yen stopped me out on this multi-month trend line. And just keep in mind that we're at highs here, but we can still fail somewhere around here in the Aussie yen. Because when you're dealing with a weekly or a monthly trend line, you can overshoot by 50 pips, and it's not really it can happen. But for right now, we are breaking out, at least for today. And if you even look at from an hourly perspective, we broke out above 78. We came back and retested it, and we're still holding up. So the Aussie yen is breaking higher. The New Zealand yen pushing right up against daily resistance here. Okay, and they're going to continue to stay bid as long as equities remain bid. So you got to do one of two things. You've got to be on the side of risk on, long stocks, short the dollar, maybe even long some, yen pairs, or you just sit on the sidelines and wait for something else to develop or for a counter trend trade to develop, because as of right now, that's not what we're seeing. We are seeing a continued move in risk assets higher at this stage in the game. So it's just important to if you're going to trade counter trend, which I've done, just take smaller positions and keep your stops tight. And if you get stopped out, brush yourself off and walk away. And like I said, the safer trade at this point, even though the risk reward does not favor being long risk with us where we're at in the S&P, in the NASDAQ, so on and so forth, the trends are still very strong and very bullish risk. So while we're still bullish risk, and until we start to see some sort of reversal patterns develop, you've got to, err on the side of safety or caution if you're going counter trend. And if you're going with trend, you still have to be very careful because of the extended natures of these moves. All right. There's no easy clear-cut trade other than, be long risk and just keep your stops really tight. And like I said, if you're going counter trend, you just take smaller positions, keep your stops really tight. There's a thing that I like to say, or a saying that I like to say, whether I'm talking about currencies or indices or whatever, I'll say X instrument is too strong to be faded, but too overbought to be bought. And that's kind of where we're at with risk and equities. It is the risk reward is not there, but it continues. And until we get some clarity, you've got to get on or just stand aside. So that's pretty much it. And with, regarding currencies, those are really the trades, be short dollars or be short yen, and I'm not really too sure the short yen is really the right trade, especially with Abe resigning. So, short dollar seems to be the generally speaking, the right trade. Although I will point out one last thing before we go. If you haven't seen the rand, the dollar rand is up 2% today. Dollar Mexican peso is actually having a big bounce, and we might actually end up putting in a false breakdown. I'm not saying you should be long, but man, those are things that are warning me about being too loosey-goosey with long risk trades, because when you have emerging market currencies that are underperforming, that's kind of one of those red flags that we have. Okay. All right, guys and gals. My name is Blake Morrow. And remember, if you're not part of ForexAnalytix, make sure you join. It's only $1 for 10 days. It doesn't matter which version you're using. You still get to use the premium version. Doesn't matter which one you end up going with, is what I meant to say. You still get the premium version. So download the mobile app while you're at it, so you can get notified when we issue a new update and analysis, or support or resistance levels are breached. And you guys have a great trading session, and I will see you tomorrow morning on the Face webinar. Thanks, everybody.